Crypto CEOs aren't called in unless something big is about to happen. This wasn't a meeting. There wasn't a discussion here. The most powerful names in crypto were just called in by regulators behind closed doors. And that time is not a coincidence, people, because the market system changed the last time something like this happened in every way. I'll show you what they're setting up today and why this is more important than most people think. Let's talk about it. Let's go over the main points because there are 3 of them and they are all important. The first important thing to remember is that XRP fell below $2 after a 6-day correction, even though ETF inflows and rising on-chain activity were both good signs. What do we call that then? Changing things. Simple as that. The people who run the market are lowering the price. Why? They want you to leave because of this. They need your XRP. They want it for their clients, for businesses, and for people to buy things without a bank account. This is how you play. Move around. In the real world, Ando is already doing this work with BlackRock. Also, I have a question for you. Do you really believe that BlackRock got involved because they didn't know what would happen? Do you really think that they stepped in without knowing who Ando was working with? Please. Also, do you think it's just a chance that Ando is holding their big summit at the same time that the New York Stock Exchange announces they are putting all of their money into tokenization? Since I don't. Now pay close attention. These things will not happen on a certain platform. Anyone who says they do is not telling the truth. Still, no one knows. It's easy to see why no one knows. It hasn't been made public. However, this is what took place. Ripple and TJM, a regulated broker for big investors, have just announced that they will work together to make trade easier, faster, and clearer. And I thought the same thing many of you did when I first read that. What the hell does that mean? I'm with you all the way? I also didn't know. I had no idea who TJM was. What should we do? We dig. Let's ask Claude. Claude tells us that TJM is an institutional broker that is controlled. That should be enough to get your attention. But it's not that simple. Their main goal is to use blockchain technology to make trade and settlement faster and more efficient. I have a question for you now. Does that sound like something the New York Stock Exchange might need or use or already be getting ready for? Yes, that's right. Now things start to make sense because speed isn't the only reason for this bond. It has a straight link to tokenizing assets in the real world. Read it again. Tokenizing assets in the real world. It is made very clear in the story that this is part of a larger trend in which stocks, bonds, commodities, and real estate are shown as digital tokens on a blockchain. What does that do? It makes it easier to move them. It makes it possible to cut them up into smaller pieces. The best thing about it is that they can trade 24 hours a day, 7 days a week. Now tell me, doesn't that sound exactly like what the New York Stock Exchange said? That fits me like a glove. Let's move on to the next story. And I think a lot of you forgot about this. I didn't, though. The CFTC, which stands for the Commodity Futures Trading Commission, put this on their own website in February of last year. They said they were going to start a test program for the digital asset markets that would focus on tokenized non-cash collateral, such as stablecoins. Who were the people who took part? Circle, Coinbase, MoonPay, Ripple, and Crypto.com. Take that in. And who came up with this idea? Carolyn Pham is the chairwoman. This is where things get interesting. This is the same Carolyn that has been seen with Brad Garlinghouse, been to Ripple's offices, and is now working for MoonPay. What does this have to do with tokenization and the New York Stock Exchange? How to do it. The CFTC scheme is all about building up infrastructure for tokenized collateral. So think about this. What does the NYSE need to tokenize stocks so that it can work? They need security that is tokenized. They need a system that makes it easy for those trades to settle. These are the things the CFTC is making. I'll break this down into 4 main points. Also, please pay close attention. First, there are secondary systems. To trade tokenized stocks on the NYSE, you need tokenized collateral to back them up, always. With the CFTC pilot, the groundwork is being laid for that exact structure. Yes, that word again. Because big names like Circle, Coinbase, and Ripple are involved, they're making rules that will work on all platforms, no matter which blockchain the New York Stock Exchange picks in the end. Are you beginning to see the picture? And finally, number 4, trust in institutions. The fact that the CFTC is directly involved sends a very strong message. This is no longer crypto speculation. This is real market infrastructure that is supervised by the government. This is what banks need before they move trillions of dollars. Take a step back and look at the bigger picture. The CFTC is making the safety lines on ramps and off ramps for big tokenization. After that, We get this from Brad Garlinghouse. Before I play this clip, here's something fun about it. So you can be sure you can hear this, let me plug in my headphones. Which cup does Brad have in his hand? That coffee cup from CNBC? That's not hot coffee, right? That thing is a microphone. You ever watch jokers who aren't very useful and you wonder why they always have coffee cups on them? The same thing. The mic is in the cup. Okay, let's hear Brad. Rebuilding trust is the most important idea. I believe that also holds true for crypto. Last year had a lot of bad luck, including some cuts I gave myself. On the other hand, I think the future is very bright as we rebuild trust with the ecology and the big players. 24 will be a year of going back to basic ideas. Realizing that following the rules is very important in crypto, as it is in all banking services. We need to put compliance first if we want to build trust and take advantage of the crypto chance. Keeping warm is the main thing I'm looking forward to in Davos. That was Brad from a few years ago in Davos. Now for the important part, he said he wanted a lot to come out of Davos, and it all did. Then where does that leave us? Things that are bigger, things more important, like tokenizing the New York Stock Exchange, want more ETFs, like when large amounts of institutional cash finally start to flow in. How are we going to get there? This is where it all begins. The crypto market structure bill has been put on hold, so Coinbase now has the ball. They are, in fact, blaming Coinbase for the pause. It's fine if the holdup is about output. Do not fill it in. Don't worry about it now. I can tell you right now that yield is not important to organizations. They want things to be clear. They are waiting for clarity before they can properly put money to work. Yield can be taken care of next week, next month, or in 6 months. There is talk about who can give yield, how much yield, and whether DeFi yield is allowed. That can all be taken care of later, but what about clarity? That needs to happen right now. This bill does a lot more than just give in and wait on one problem. The structure as a whole doesn't make sense. Move forward, do not stop. After that, the banks can take a break. The big banks can take a break. Brian Armstrong is free to show up. Brad Garlinghouse is free to show up. He can also find Charles Hoskinson, no matter where he is hiding. It's likely in the mountains of Wyoming. Then you talk about what's fair, what can last, and how this market will move forward in the long run. That being said, how does the Clarity Act let organizations in? In fact, it's very easy. Now let's look at the main institutional drivers. First, the updated Bank Holding Company Act lets banks do business with digital goods. Second, when SAB 121 is revoked in January 2025, banks will be able to store crypto assets without having to list them as losses on their books. That's really big. And finally, the OCC has given National Trust Bank charters to companies like BitGo, Fidelity, Paxos, and don't forget Ripple, which helps ETF infrastructure directly. For the fourth time, the SEC has already made progress without the Clarity Act. But here's the real key. There are no SEC rules for tokens if the Clarity Act passes, and they are labeled as commodities instead of securities. There is already a list of 8 such coins. What does that mean? It gets a lot easier for companies that make ETFs to release new goods. That's the important thing, people.